Hey, Steve Poirier with Log Pond Realty. Welcome back to our weekly real estate segment, Pond Points. This week we are talking about questions that a mortgage lender will ask when applying for a mortgage. If you've watched this segment in the past, you know that one of the key points that we've emphasized is the need to speak with a local lender about getting a pre-approval letter right off the bat. That's your first step in a successful home buying process. This week, we're going to talk about those questions to expect from a mortgage lender. The first question to expect from a mortgage lender is your employment status. Are you a full-time employee, part-time employee, contract, self-employed, hourly, salaried, and what is your length of employment? Mortgage lenders love stability. They love to see a long-term working history either in the same company or in the same profession. So you'll need to show what your employment history has been over the last several years. The next question to expect from your lender, what is your income? Obviously, your ability to repay your mortgage on a month-to-month basis is of critical importance to your lender. They don't like late payments. That kind of goes without saying. You'll be asked to provide certain documentation to verify your income, whether that be tax returns, W-2s, pay stubs, and the like. If you're self-employed, have variable income, you'll be asked to provide additional documentation. The next question, what is your debt? Now, debt is a kind of a two-edged sword. Too much debt is not a good thing because it hinders your ability to repay your mortgage. But a mortgage lender is going to want to see that you're able to carry a balance and able to repay over time. So they're going to want to see things like credit card statements, loan statements, and the like. The next question to expect from a mortgage lender is what kind of savings or additional assets you have. Now, what a lender wants to see is what is your fallback position? What happens if you lose your job? What happens if something terribly goes wrong to the house? You need to replace the roof or HVAC or water heater or the like. Do you have money set aside in case of an emergency? They're going to want to look at savings statements, brokerage statements, and the like. The final question to expect from a mortgage lender is what kind of property do you plan on purchasing? Is it a single-family owner-occupied, or is it an investment property or a vacation property, non-owner-occupied? Do you plan on renting it? Those questions are critical because it could change the terms of your mortgage loan. So be prepared for that. Now, there are other questions, but that's all that we have time for this week. We welcome your questions, we welcome your comments, we welcome your thumbs up on social media, and we hope that you visit us next week for another edition of Pond Points. Bye now.